If you listen to the headlines, they are conflicted between the sky is falling and the worst is behind us, and the data lies somewhere in between. Take a minute to unpack what's happening in our market as of mid-June 2025, especially if you're thinking about downsizing or making a lifestyle change. Headline catching numbers are that Toronto is officially in a buyer's market right now. Inventory has jumped over 40% compared to last year, and homes are sitting on the market a little longer, about 39 days on average. The average sale price across the GTA is around 1.12 million, which is a 4% decrease year over year, yet a 1.2% increase month over month. Some of this is due to seasonality, and some of it is due to current market conditions. We're recently seeing a slowdown, but an upward trend in average sale price month over month this year. When we look at the last 5 years, except for spring 2022, when the market hit its peak, we are actually up compared to the 5 year average in Toronto. 2020's average sale price was $929,000, $1.12 million. Detached homes in Toronto have an average sale price of $1.72 million, a 5.6% decrease year over year. Semis have an average sale price of $1.3 million, which is an 8.4% decrease year over year. The average sale price for condominium apartments has dropped 7.3% year over year at $709,000. Sales are down overall year over year in the condo sector by 25%. There were 6,244 transactions in May, a decrease of about 11%, but an increase of about 11.5% month over month. Days on market has increased to 39 days versus 28 days year over year, which is the single top indicator of a market slowdown overall. The sale to list ratio averages 99% of asking versus 102% year over year. Financing conditions are actually pretty favorable. The 5 year fixed mortgage rate is hovering around 3.9%, and that's pretty attractive, especially if you're looking to lock down something long term. Now, keep in mind that 60% of Canadian mortgages are up for renewal this year and next. That's going to change what affordability looks like for a lot of households. But for buyers ready to move now, this environment gives you real negotiating power. If you're looking to downsize or looking for something that's more aligned with your lifestyle, say a luxury condo with concierge service or a low maintenance townhouse, this market puts you in the driver's seat. There's a lot of choice out there, and sellers are more open to conversations around pricing, terms, even closing dates than they were before. Consumer confidence remains front and center for potential buyers. While affordability has improved, economic uncertainty continues to cast a big shadow. Ongoing trade and tariff war with the US and a softening labor market are two key factors. What do we expect to happen over the summer months? Will we see any changes in the behavior and mindset of potential buyers and sellers? Have we already hit the spring peak in our market? Will we continue to see a jump in sales in June, July, and August? Or was May the peak? At the moment, there's a 50% tariff on Canadian steel and aluminum. More than 90% of Canadian steel and aluminum is exported to the United States, according to 2024 federal government statistics. Canada exported $15.9 billion worth of aluminum to the US. Canadian labor market basically tread water again in May, adding only 8,800 net new positions. Apart from the pandemic, of course, there will be certain pockets in the GTHA where the housing market will be highly influenced by manufacturing and trade. Bank of Canada last Wednesday held its key benchmark rate at 2.75%, citing the need to probe the effects of the U.S. trade policy. But many are saying that several cuts will still occur in the face of tariffs. The decision marks the second time in a row that the central bank has remained on the sidelines after an aggressive cutting cycle, which shrunk rates by 225 basis points over 9 months. Economists are still expecting there could be between 2 and 3 more cuts this year, and the final rate by the end of 2025 will likely end up around 2%. Now that there are dozens of listings available in certain locations, the location becomes the defining feature. Confidence in the market is everything, and buyers are willing to overpay in a hot market rather than risk taking a chance on a great deal in a bad one. Until we can get the tariff war reined in and we get to an overall tariff level of 5 to 10%, we can't really forecast much in the real estate market. But at the moment, If you're a buyer who can afford to buy, then this is the market for you. If you have any questions, please reach out.